The U.S. economy has just delivered its fastest quarterly growth in nearly 2 years. GDP surged 3% in the second quarter, outpacing every forecast, igniting Wall Street and triggering fresh calls for a shift in monetary policy. But behind the headlines, a power struggle is unfolding, one that pits economic momentum against inflation fears, and the Federal Reserve against the political establishment. This is the story of why the economy surged, why the calls for rate cuts are growing louder, and why the decision that follows could shape America's economic course for years to come. History offers warnings. In 1984, growth surged, yet the Fed stood firm, fearing inflation. In 2018, a trade-fueled boom collided with rising rates, sparking market volatility. Political pressure on the central bank is nothing new, but every time it returns, the stakes climb higher. Today, the numbers paint a complex picture. Second quarter GDP climbed at a 3% annualized rate. Inflation in July held at 2.7% year-on-year. But core inflation, stripping out food and energy, sits stubbornly above 3%. Unemployment remains at 4.1%, yet job creation is losing momentum. And into this mix comes a familiar voice, Donald Trump, demanding an immediate rate cut, framing the move as a boost to growth ahead of a turbulent election season. The surge is powered by resilient consumer spending, a pre-tariff export spike, and higher government outlays. But it is underpinned by a fragile balance. The Federal Reserve's restrictive stance is designed to cool inflation expectations, but cutting too soon risks undoing 2 years of painful tightening. The path ahead is a crossroads. If the Fed resists pressure, growth may slow, but inflation could remain in check. If it yields, the short-term boost might come at the cost of another inflationary surge. And hovering over both scenarios, rising tariffs, volatile global markets, and an election-year fiscal climate that could tilt the balance in unexpected ways. For investors, the stakes are immediate. Bond yields, equity valuations, and commodity prices could swing on the Fed's September decision. For policymakers, the question of central bank independence looms large. And for corporate leaders, the challenge is planning for a split reality. Robust demand now, but with cost instability lurking ahead. The second quarter's growth surge has set the stage for one of the most consequential policy showdowns in years. Whether the Federal Reserve or political voices prevail will shape not only the remainder of 2025, but the resilience of the U.S. monetary system itself. The question now is clear. Is this the last burst of strength before the cycle turns, or the first step into a new era of expansion?